Hey, good morning, everybody. Today is Tuesday. It's March 26, 7:21 a.m. Eastern Time. So yeah, the year is passing too fast. March is already gone, and we start to April very soon. Anyway, let's see. Let's review the market structure document and compare what we have in the book right now, and consequently review the future movement. Okay, so as I cited yesterday in the market structure documents, the volatility skew is not, showing us a bullish smirk. It's trying to create a smile. Smile is when, the market's totally balanced. Smile is the best market. When you see like a smile in the volatility skew, means that the market is totally healthy. So when we are seeing like flipping, flopping, implied volatility as you have been seeing since December, is because the market, the stock market is not healthy anymore, right? And we just need to follow the flow, right? As soon as we see like a buy opportunity, we buy, you do like a swing trade, and as soon as you see a sell opportunity, you sell and follow the flow, right? You guys have been seeing that I have been open calls and puts, and I have been closing fast as I can to take the maximum profit from the market, right? So that's what I have been doing. So what I did yesterday, what I did on Friday, I bought again April 28 puts in the money, 5,330 strike. So that was the best break even that I found in the book, the best theta and the best implied volatility. So if I see markets going against me, I had time to close without a small loss, right? So I'm looking for a good, contracts that premium will not be co-holder, fast and furious, because the setup is to dealers collect premium. As I have been explaining you guys, I don't have any intention to buy 0 DTE or to buy 2, 3 or 5 5 DTEs, right? I'm looking for 45, 90 days contracts, right? That's I have been doing and I have been showing you guys. What I also did yesterday, so I closed the puts, put profit in my pocket, keep one contract, and then I bought one call. So as soon as I saw a rejection at 5,230, to be exactly 29, I told you guys in the group, I closed my call, right? I took profit again, I closed my call. I keep the put, and at the close, I close the put as well, and keep my portfolio again. Zero allocation. Zero allocation. What do you do today? So if you see a reject at 5,240, I will buy puts. And if I start to see, a drop in the future, maybe I buy in the pre-market, right? Maybe I buy in the pre-market, because this movement in the future looks like a squeeze, because the flow in general is bearish. The volatility skew is not printing, a bullish smear. It's still bearish, So meaning call puts tended to be paid, not calls. Okay, so that movement in the future could be a squeeze? Yes, and I put this very clear in the market thread. Why I put this very clear? Bearish is volatility skew, but dealers add liquidity. Usually the pattern that you have been seeing since December, as soon dealers add liquidity, we have been seeing green days in the day after, right? Why? Because they have been distributing. Risky assets is leaving their hands and moving to retail. So usually the last one that stay to turn the lights off, that's the one that you lose a lot of money. Consequently, beginning of March, I decide to be full cash and only do swing trades. I'm not perna bull and I'm not perna bear anymore, right? I'm not perna bull anymore because I like dollar. Dollar pay my bills. Dollar, sustain my family. Dollar make me have a buy power. And so far, my profits up to now is 57%. I'm beating SP 500. I'm beating inflation. I'm beating, everything. So that's my goal, to protect my heritage. I make money with my work, not with the market. Market is a tool that we need to use to protect our heritage. Greed kill people. Okay? So the dark pool index shows us a setup, not for a squeeze at all, just a setup to melt up to sell high, because they add liquidity, and also the GX jumped $2 billion. So a very controlled sell-off, no panic, because they suppress volatility. Okay, something that caught my attention is because today is 26 and tomorrow is a VIX expiration, 27. So usually we see spike in VIX in the day before the VIX expiration, because the market, the dealers, I don't know if the Federal Reserve or if it's the liquidity providers, they have been suppressing volatility, right? And they are keeping the market healthy. So since we are not seeing a spike in volatility right now, let me put VIX in the screen just to make sure. So the VIX is 13, right? Usually in the day before of the VIX expiration, and today is the day before of a VIX expiration, the VIX expiration is tomorrow, usually we see a spike in volatility above 17, so majority of the time 18, 19, and even 20. And then in the VIX expiration day, we start to see the VIX is dropping to where? 12, 13. Now, for the first time, in the day before, we are seeing VIX at the bottom. Back test MA 50, but at the 13, lower, not higher. So why discounting my attention? They are suppressing VIX, they will suppress VIX at this level, or they allow to market to do wherever the market wanna do. Because you guys have been seeing that such market is totally manipulated. You guys have been seeing the Delta One orders, printing the book, as soon market, start to melt down, especially start, to back test levels that the sell, pressure tend to be intensified, right? I have been showing you guys this in real time. So this is something that caught my attention. The VIX didn't spike in a day before of the VIX expiration that will be tomorrow. Okay? So let's go back to the market structure. So the dark pool suggests, right? Suggests, a squeeze, a green day. And I also highlighted that I was looking for a flat green day, as we saw as yesterday, a flat red day. Nothing major. Nothing major. So far, future suggestions open nearby 5,240. That's a level that you guys see that I put in the market wrap in the close group. So let's compare the volatility skew. Volatility skew is almost the same. It's not showing any time, it's not printing in any time a bullish smirk. It's trying to build more like a smile. That means a balanced market, right? That's mean a balanced market. But as you can see, the volatility is much higher in the out of the money puts than the out of the money calls, because that we call as a volatility skew as bullish, a bearish smear. If it was the opposite, higher implied volatility in calls and lower implied volatility out of the money puts means a bullish smear. So calls tend to be paid off. Means that out of the money calls tend to be in the money. Now it's different. What is showing us that puts tend to be paid off, and consequently out of the money puts tend to be in the money. So the volatility skew is still the same, didn't change. So now let's see the gamma and the delta design. So since at the close printed a bearish flow, because the overall delta flow was bearish, I told you guys, if we are looking for a melt up, maybe we're supposed to be a CL reject at 5,230. Again, I put over here, right? It still tends to be the reject area, right? But because the order that we saw suggests us a backtest at 5,240, and then we will review later on, okay? But per deltas, 5,230 is where we start to print a bullish delta flow, positive delta flow, and 5,240 tend to be the inflection point for the upside. Note that at 5,250 is where we have divergence printed yesterday, because we have negative delta flow with a positive gamma. Also, 5,250 is the plus GX, is where we have been seeing a rejection. We saw a fake break, we backtest 5,206, and then we close below 5,250, right? So what you have been seeing, dealers are willing to sell higher. And consequently, I told you guys in the closed group yesterday, are you seeing a possibility to see another squeeze to backtest 5,270 or maybe 5,280? And consequently, I'm not comfortable to be pen a bear right now, because I really, really think that we could see such squeeze up to there. Okay, so that's the delta flow printed yesterday. Looks, that 5,200, 5,205 are, the major support, because the GX start to be negative below 5,200. And look, the gamma design, they add defense at 5,200 and 5,205. Consequently, I told you, if they want to melt down, 5,200 and 5,205 tend to be the support, okay? Tend to be the support, tend to be, the defense to keep the market above 5,200. So this is what we have regarding delta flow and gamma structure. So let's open the spreadsheet to see what we have right now. So the delta flow now became bullish, of course, because if you check the volatility skew show us that above 5,220, calls tend to be paid off. Consequently, since the future is bringing us above 5,220, we need to see delta neutralization. Consequently, bullish delta flow at the open, right? Look, now how different is the delta and the gamma, right? So instead of 5,240, 45, you'll be the inflection point. Now will be 5,250. Why? Because you have higher delta flow in such level, and intraday GX is at 5,250. So markets tend to backtest 5,250 and reject it. Okay? And reject it. So yes, we could go up to 5,250 today, and I expect a rejection. So if you see a rejection at 5,250, Now the drop and support tend to be 5,230. Why? Because is where we start to see lower gamma and negative delta. And below 5,230, we start to see negative gamma. So instead of worst case scenario will be 5,205, 5,200, now the flow pre-market showing us that the worst case scenario tends to be 5,225 because is well located the minus GEX. Okay? Because is well located is the minus GX. So now let's go back to the market wrap and especially check the orders that you saw. At the close, you will saw higher delta orders that I told you guys. If they sold, expect a rejection at 5,220 and expect a rejection at 5,230 because of the break-even of such orders. Since the future is open around 5,240, so now you guys need to look for 5,220 tend to be the floor and or 5,230 tend to be the floor because those big orders that print at the close and match with the design 5,230 because positive gamma and negative delta, so we have divergence information in that level, and 5,225 we have positive delta and negative gamma. Also, we have divergence information in the level. So now 5,225, 5,230 tend to be the floor for today. Also match with those orders, right? Also match with those orders. Dealers always know what they will do. I highlighted more bearish because the flow was bearish, but I put the break even. The idea is to look for the break even, and we review right now at the open. So now make totally sense those orders because they set up a floor between 5,225 and 5,230, and the break even of those orders is inside their range. Okay. That's what we have in the economic agenda today. So tend to move the DXY special and the 10 years yield. Consequently, if you see a meltdown in the 10 years yield in the DXY, force investors to buy risky assets. Yesterday we saw swaps running on in the entire day and the melt up in the 10 years yield. You saw consequently also forced people to sell risky assets. And now the setup is to buy risky assets. But remember, this movement tends to be a squeeze because the dark pool data. Book still flip-flopping gamma and delta accordingly they want because they have been distributed. And the volatility skew is not printing a bullish smirk. Okay, so we already reviewed everything, so you guys pay attention in the levels. The level is the most important thing. So just to reviewing, so I expecting a back test at 5,250 and possibility to see a rejection. Worst case scenario nowadays will be 5,230, and worst case scenario 5,225 is where we have divergence, data divergence. Okay, so those will be the areas that will be defended by the dealers and match with aftermarket call higher delta orders. Okay, 5,250 tend to be back tested. 5,225, 5,230 tend to be the worst case scenario. Okay. So we already reviewed the structure. Let's talk about Bitcoin, because I'm seeing I have been highlighting to you guys that greed kill people, you know, you guys have been asking me the same question several times. I'm not a financial advisor. I'm not, giving advice you guys to sell, but I'm giving you guys advice to open your eyes with such assets. Such assets, is already in all-time highs. Such assets by Fibonacci that I posted you guys before several times, could you back test 75K, 77? That's the target that I'm looking for. Okay, remember when it was trading at 73, I told you guys, be careful with Bitcoin. Bitcoin is preparing a meltdown. And you guys came to me and said, Fabio, I'm not seeing that. I'm seeing very strong. And then I come to you guys with a real return calculation. I come to you guys again. If somebody bought Bitcoin pre-COVID at 29K and apply the real return math, Bitcoin is supposed to be trading nowadays at 45K to give return for those that invest in Bitcoin at 29K pre-COVID. So, since we were trading at 73K, the Bitcoin is already providing 55% above the real return. That's mathematics. So, those guys that keep asking me the same question is because you guys have a lot of greed. It's because you guys look for $1 million call. It's because you guys look for 100K call. It's because you guys is looking for a 200K call. This is not going to happen. This is not going to happen. Bitcoin will do all-time highs before halving, and you guys see a meltdown that could backtest 50,000 in 1800, and then yes, you guys, you see another spike. My doubt is, as soon as you see a backtest at 50,000 in 800, the next spike, you will break the all-time high that I'm looking to see an all-time high before halving, or we will just backtest the 70K region again and repeat, maybe consequent clone, mirror 2020 movement, and then you see a real crash. That's the movement that I'm looking for Bitcoin. I'm looking for only graphic, not flow. So I also posted in the closed group that this movement was a squeeze, wasn't buyers, was short sales forced by the market to buy and bring assets back up. The volume is really low. Bitcoin has a very big issue that called Michael Saylor. Michael Saylor basically is a systemic risk for Bitcoin. But anyway, greed kill people. You guys have been asking me the same question. I'm seeing Bitcoin strong. I'm not seeing any drop. You guys told me at 73. Bitcoin backtest 60,001 and 500. If you guys sold when I saw weakness and bought back at 60,001 and 500, you guys supposed to be make 12 grains, right? Easy 12 grains. Again, you guys ask me the same question. I'm not seeing any weakness. What you are seeing? Again, real return calculation. Bitcoin is already providing 50% profit above the real return. It's because that you guys seeing a lot of volatility in such assets. So it's totally normal to see, a 10, 20, 30% pullback in such assets. Such asset also doesn't have any fundamental to cost 70,000 K. Any. When I go and ask a Bitcoin, why Bitcoin costs 70,000 K? And why gold does not cost 70,000 K? Bitcoiners doesn't know how to answer. Bitcoiners also doesn't understand the risk we have to invest in cryptocurrency, because cryptocurrency is just a technology, and is a technology that could become obsolete anytime. And also it's a technology, if some government come and said, I don't want a Bitcoin in my country anymore, and then they could block the TCP IP ports. So what's going to happen with the Bitcoin? Bitcoin will die. As like in Arabic countries, you cannot watch porno through internet. So if you do like www.pornohub.com, you'll be blocked by the government, in Arabic countries. So what's the solution? They need to use a proxy, but that's totally different in the Bitcoin, right? Because you have like a web interface that use port 83,033, something like that, 83,000 ports. So if some government instead block this port, it's done. So look how risky we have with the Bitcoin, different than gold. Because, gold will not be finished to be mined, And gold is used in our day by day. Is used to build chipsets, is used, inside our phones, is used inside our car, is used inside our computer. We have gold everywhere. I'm not talking bad things about Bitcoin, I'm just showing you guys the systemic risk that you have, especially called Michael Saylor. And why? Because it's already 55% profitable above the real return. Guys, take care. Again, great Q people.